Hey everybody, how you doing? Tom Willard here with the next in the series of the educational videos I'm putting together for everyone on my YouTube channel. This one is going to be about scanning. This is actually a special request from three different people contacted me and really wanted this, and so I figured I'd instead of talking about one of my favorite patterns, I'll do that probably in the next video. I'm going to talk about scanning during the market and after, because that's how we generate ideas. Now, there's a number of things that I want to discuss here. First, let's talk about it's the afternoon session, about 2:30 in the afternoon Eastern time, and I'm filming this on December 18th, 2014. And again, it's not the date and time is not specific. This video, if you watch it 5 years from now, will still be valid. All these videos will, with regards to techniques as well as approach. So what I got here, and I've got a limited amount of space, so I wanted to kind of shrink things in. Here you got my daily chart. You guys see it in my videos. You can pull up the weekly chart. I've got the XME up here, ETF right now. The daily, 60, 15, 5, and then of course the 2. Now from a scanning perspective, let me first say that if you're scanning for swing trading ideas and day trading ideas for the next day, my primary time frames that I consider are of course the daily first and foremost, then the 60, okay, and then if I'm swinging, the weekly. If you're day trading, you don't really need to worry about the weekly. It's the daily and the 60, and then you look for pockets of voids. If you go back to the void discussion video I had, where you've got areas for things to move. So here, for example, on the 60-minute chart of the XME, you'll see that we gapped up here, okay, popped up here into this resistance area and sold off and came right back down and filled the gap. And now we found support in the gap. We've popped up and now we're going sideways. So right now we're finding support here. This could set up a nice base for tomorrow. If things get back up in here, it can take a second crack at breaking this resistance area here. And if it can break that, then you've got about a 60-cent area to you got a little minor, what we call minor pivot there. Which isn't too hard to overcome. But your major resistance here is this resistance was a support area here about 32.75, and it became a resistance area here. So that'd be my next really significant area of resistance here on this XME. So using these time frames, you can go through and kind of figure out what's going on. So for example, the way I've got this set up here is I just did ETFs because they're easy for you can get a lot of different sectors. It doesn't take up a lot of space, and again, I'm limited on space here from a projections perspective. And what I did was you just put them in a miner like this, and your software may or may not work. This is Realtick. I use Realtick and TradeStation primarily as my two charting softwares, and then of course I've got accounts in various other brokers. Okay, so but I use primarily Realtick first and foremost. If Realtick is down, then I got TradeStation, so I've always got a backup, and then I've got TradeStation actually up at the same time, typically on a different computer than my Realtick, so I've got both up at the same time. But if one goes down, all I need is one, and I can just use that. So what I do is you build a miner and say these are, for example, again, these are just a bunch of ETFs, but you take a look at these and you say, okay, well, if we're doing, say, live trading, let's go to the Qs. Is that on here? I don't have the Qs on here. Let me just add it. Hold on a second here. Qs and the SPYs. Okay, you notice how they automatically sort here based on their percentages. So let's go find the SPY. We're having a strong day here so far. Okay, you'll see the SPYs gapped up here into this resistance area, and it's just kind of chopping along here on the 60. Okay, 15, 5. But you may say, okay, well, let's look. Okay, we've got a really strong day. Now, the problem with these big gap days is it takes a lot of the steam out. I mean, it would have been better, ideally, right, if it opened flat and then put in this kind of move, then you can get in. But when it opened here, I mean, ultimately from a net perspective, the open today was at 204.74, and we're at 205.13. We're about 30 cents above where we started. Okay, now we made a new high, then we made a new low. It's tornadic formation, as I call it and teach. That's to come down the road. Okay, and then it comes back and makes a new high. It's just kind of wandering around here. So a lot of times these big gaps, you hear a lot of people talk about shock and awe, and a lot of times they're kind of the lower odds days to trade something. There's not a whole lot of movement, not all the time, but often. So you've got to pick your ideas. So say, for example, you saw this morning the market was gapping up, so you're thinking, okay, hey, I want to lean long with the strength. First off, from the FOMC thing yesterday, you see the strength we had all day. Okay, and then the big gap up, but you're tempered enthusiasm, hopefully, because you see the gap, it's a massive gap after a big move up the previous day into a resistance area. Okay, hopefully it doesn't take, most of you will understand that, okay, I shouldn't be, gangbusters buying the crap out of everything on the open, hopefully, and if you're not, then maybe now you won't, okay, by listening to this. Same thing here with the Qs. If we look at the 60-minute chart of the Qs, we gapped up here to this resistance area after a pretty, markedly higher day. Now, granted, we did get crushed over the previous 4 days, and now we're right back up in that area, okay? But, going into the open this morning, you may think, well, I want the long stuff. So what you do is you go and you scan, okay, and you look for gappers up and down and in the Qs and SPYs and ETFs, if you like. You could produce a minder, and what I do is I usually sort it by the biggest loser to the biggest gainer, or vice versa, biggest gainer, however you want, top to bottom, down, bottom to top. That way, if, for example, say the market is starting to set up to go higher, okay, which say this is pulling back off a new high, let's take a look at the 60. You got a resistance point where it's right at, but a nice void above. Right now, I would be leaning long on the Qs, on the tech names. So what you would do is say, okay, well, and you're not getting an optimal set of candles here, right? On the 5-minute chart, you got a lot of hot chop, higher low, higher high, lower low, lower high, lower low. So in a sense, on a smaller time frame, almost downtrending here, okay? But on a 15-minute chart, we're in a solid but choppy little uptrend and pulling back. And plus, we've gone a pretty decent way in general if you take into account where we left off yesterday. So the upside potential here, I'd be leaning long, is probably limited at this point, okay? But, again, this is about scanning. So what you do is you say, okay, well, what's strong today? Well, the FAS, okay? Let's see, the IBB is strong, okay? And you're looking for patterns and voids, tradable areas where you can trade them. And again, taking into account, of course, how far things have gone on a particular day, because, a lot of times when the goose is cooked, man, it's cooked. And there's just not a whole lot left to do. So, for example, on a day like this is why I'm doing this video, I'm done trading. I don't think, even though I'm bullish on things, I don't feel there's a whole lot of upside potential. And I'm going to talk about reward or risk in the future, because that's really what it comes down to, is like, what are you risking to get in return? And if the thing is cooked, now, of course, anything can happen, right? A market can just go 3 times its average daily range and then put in another, double down. It's perfectly legitimate and possible, but you can't let that curb your thinking, right? To think, oh, okay, well, all the time, then I just want to be leaning long when the market's strong. Not necessarily. Okay, you've got to take into account where things have come from. So, for example, yesterday here, we chopped around here in the morning, moved up, pulled back. FOMC came out at 2, pretty volatile, but ultimately came strong, came all the way back in, then went all the way back up into the close, and of course the big gap up. Okay, so during the day, what I'll do is, if I'm bullish, I'll pull up a minder of your favorite stocks and sort them, or the biggest gainers on the day, the biggest losers on the day, sort them by top to bottom, and look for pockets where you've got tradable areas. And of course, considering where the stocks come from, okay, on the daily chart, and what it's got to the left of it. Those are the key points when you're looking for day trading ideas. Now, if you're looking for swing trading ideas, a lot of times what you can do is you can look at, this is one of my minders here. Let me just kind of draw it in. You're not going to be able to see very much because I don't have a lot of room here to work with, but let's just do this, okay? Let me do this here. Let me just kind of close this up here a little bit. Okay, so now let's talk about looking for swing trading. So after the market's closed, or even when the market's open like it is now, you can do this. Usually have a chart, and you see you link the minder to the chart, and you can do that again. Talk to yourself. Look at this keg. Good Lord, look at this weekly chart. 10 classic head and shoulders, shoulder, head, shoulder, breaks the neckline, and old girl is off to the races. Okay, but now you've got on this weekly chart, a climactic setup. You can look to buy in here if you get your setup here. Let's look at the daily. The gap kind of took it out of it, because now, see again, say I said screw it, man. I love this weekly chart. I want to buy this now, and I buy it at $1.55. That's what it's printing right now, $1.55. You saw it just move. Okay, where's my stop going to be? Well, your stop is typically going to be at the low. So about a 55-cent stop at $1 is where it bottomed out here, right? Or some people, if you're more conservative and don't want to risk as much from a penny-by-penny perspective, you can say, well, the low of today on the gap, okay? Of course, there's a higher odds it'll come down and take out that gap, okay? So say you get in a $1.55, you got a 55-cent stop. Well, typically the general rule of thumb is you want 3 times your risk for reward, okay? And so let's look. Where's the first resistance area here? About 250. Okay, so you got basically $1 worth of target for 50 cents worth of loss. Okay, that's what, 2 to 1. Not great. You better be darn sure about your, you better have a high odds trade and win on a higher percentage on trades like that. Now, you may say, well, look at how far it's come, right? If it bounces, of course it'll probably bounce. I mean, look on the weekly chart, it hasn't even trailed out. Each day's high, or each week's high is lower than the previous one from here, okay? And this is capitulative volume. So if you're speculative, okay, you may say, well, the hell with it. I'll buy here $1.50, put my stop in at $1, fishing 55 cents a share. So say you did 1,000 shares, you're risking 550, 600 bucks, okay, if it takes out your stop, okay. And of course, if it doesn't open up at 50 cents a share, because remember when you're swing trading, okay, you make sure you know, because you get your stop at 99 cents a share. It doesn't mean you're going to fill it. You may get out at 10 cents a share. Why? Because we could wake up tomorrow and this keg could be at 0. You could lose all your money. Okay, so I don't want you to have that warm fuzzy thinking on when you're swing trading that, oh well, this is my stop, so I'm only going to lose in this particular case 550 bucks because I'm risking 55 cents on 1,000 shares. Okay, no, not the case. Okay, typically you can get out. Okay, what is typically? I don't know a percentage for you, but there are times when things will gap down against you. But the odds of it gapping down against you versus gapping up for you in this particular case, I think are less. Okay, therefore, if you're more of a risk taking trader, you could take a shot at something like this. Now, I don't own this position right now at this point. Okay, and I just saw it here. It's having a strong day from a percentage up basis, and you can see how far it's crushed. And if you bring in the Fibonacci concepts I talked about in a previous video, you can say, well, look, if you're looking even for a 30% retracement, well, let's just, again, round it off. 9 to 1. That's an $8 move. Okay, $8 move, 50% of that's $4, right? So $4 off 9 takes you to 5. There's your 50% retracement point at 5. So a legitimate target, you say, is 4 based off fib percentages. You say, all right, 4 is reasonable. Okay, it ain't going to happen tomorrow, probably. You never know. Could open up at 9 tomorrow. Who knows? Okay, but and so you got to have the fortitude to sit through it as it oscillates and goes from 3 and may go back to 150 from 3 and then go back to 375, then come all the way back down to 2 and then hit 4 next, halfway through next year. Okay, or next month, or like I said, tomorrow. Who knows? Okay. So that's an example of how you may swing trade. But that, to me, is interesting. I'm not in it, but I'm looking to say, hey, this might be something I want to swing trade. Let's see what's going on with Mobile Telesis. See, this is an ADR. It's too gappy. I usually am not interested in this, and you can see it's come too far up. Okay, from a swing trading perspective, it's been crushed. That's too cheap of a stock. Typically, these real cheap ones I don't bother with. So when you're building your universe of stocks, okay, a lot of people, what I did was you could just take the S&P 500. Okay, and then sort it by volume, figure out what your volume requirements are, get rid of anything below that for that day, and then just save it and use that one and then add and subtract. So stuff that comes up, say a hot stock comes up, there's an IPO that I like to trade that isn't in the S&P 500, then you add. Okay, and as things get bought out or whatever, you subtract. And so it's a living minder where it's continuously getting larger and smaller depending on what you're adding to it. So typically this miner here is an old one. I don't even use this because this is off my laptop. I don't trade on my laptop. So this is just a bunch of old stocks. So I don't want you to get that picture that these are in my current universe that I'm using to assess. Okay, and so when you're scanning in the evenings or on the weekends, say you don't have time, you want to scan just once a weekend, what I do is just sort them by the gains, and you start with a weekly chart. Are we in an uptrend? Okay, or in a downtrend, you want to look short. Uptrend, you want to look long. A downtrend that's been going for a long time, you may want to look for a reversal. Okay, an uptrend that's just starting, you want to look for a long. Daily chart, you can see it's starting to try to bounce out of this area. The weekly's crushed. It's making a higher low. Okay, you're coming on declining moving averages. Okay, mixed bag on that one. Okay, AEM, there's a lot of these things that are crushed. Here's one that's in a NetEase is in a nice strong uptrend. Okay, very nice strong uptrend. But then you see these candles, right, that are huge. I'm getting on a different topic here, but you've got these candles where if you're getting in, you're putting your stop below the pivots, right? You are risking so much, okay, from a dollar perspective on your shares that you better have 3 times. And you see, you're not going to get 3 times this risk to the next high, to the previous high, okay? And that's typically your most conservative target. So, when you're looking at that, you basically something like this, I say, screw it, I ain't trading that. Not on a swing trade anyway. Okay, and it's too thin. You can see 282,000. Typically, I want to do something that's doing 1 million of shares a day if I'm day trading. Typically, as a general rule of thumb. MGM, these gamers have been crushed. I took Win yesterday actually. Um, this one's going sideways. Let me just pull up Win so you guys can take a look at it. Because, and I even tweeted about this. Here was Win yesterday. It was down a ton. It gapped down again. I said, guys, watch it long. Okay, look at the weekly chart. And yesterday, let me go back to the daily chart. You can see it got crushed here early. I thought, okay, beautiful. Came down, made a nice lower low. Okay, and then try to find a way to get on. Boom, right there. Okay, and then sit through, target the high of the day, got it. Okay, beautiful. About a $3 move off this area, and you're risking here if you keep it tight, maybe 50 cents. If you keep it tight and give it a little bit of room on Win, things like this that are more spready, I typically give it some cushion, but then I better have the reward that allows me to take it, right? 3 to 1, 4 to 1, okay? So a lot of things here. So to recap, it's kind of a longer video, but I wanted to kind of talk about a number of different concepts here. First off, if you're scanning during live market, pick your direction. Should you be leaning more long or short? And you can also go by sector. You can say, okay, well, look, I'm going to look at the sectors, and the sectors are going to tell me which sectors are strong, which ones are weak, which ones have room to go, and then go through that sector, find the strongest and weakest ones, and try to time it, looking for your patterns and your voids, your tradable areas. Now, again, the void isn't the end-all be-all, though. Sometimes I'll buy stuff right in the midst of resistance, okay, only because I'm intuitively seeing something that's there, maybe in the prints or whatever on the level 2, and I'll take something. So it's not the end all be all, but typically that's what you want. You want those areas where you can move stock, or the stock can move freely. So on the, during the day, scan, look at sectors. You can sort first by sector. Say, well, what's strong, what's weak? Let me see if I've got my sector here. Okay, so you can see strong as financials are strong. Okay, the GDX, the miners are strong. Let's look at the daily there. Okay, it's up here. Let's take a look at 60. 60 came up. It's basing. This may set up a nice key. I mean, hanging out here, this is beautiful for tomorrow. And you got to take that longer term approach. Like I said, on a day like today, I'm like, screw it, it's done. We had a big move up. We're going side, but go ahead and base for me. Let the rookies get in there and get chopped to pieces. Okay, I'll come back tomorrow morning fresh and take a look and say, okay, look, it's got a tradable area here. It's based out. Okay, it's building a base of demand. I could look to day trade this tomorrow. Okay, and I'm not actually, for the record, for those of you guys that follow me on Twitter, I'm not trading tomorrow. I've got some other things, and I won't be trading much the next couple because of the holidays. Actually, it's Christmas next week, New Year's the week after. So I'll be trading sporadically, and of course, when I'm trading, I will tweet. But I am taking tomorrow off for sure, which would be December 19th. Okay, but just giving you an idea. Okay, so this IBB, this biotech, very strong. See what's going on there. Okay, it's up. Look at 60. Okay, up here near resistance. It's got some more room to run, but it's extended. Wouldn't touch it. Okay, at this point. So you can short by sector. So say you're digging this GDX, you're digging it show. So now you pull up the miners, right? You say, okay, well, what's in the GDX? What's it, ABX? Okay, see, do you see the relative weakness there? Notice how ABX came down off the high, right to GDX, hanging out more near the high. Okay, so ABX, GG, right, hanging out here near the high, not bad. AU. Okay, not bad. Newmont, okay, holding up here pretty well. And then usually, typically, I'll look at the silvers too. I'll go to the SLV, see what's going on there. SLV showing some weakness here. I gotta go to the SLV. Okay, so that's relatively weak. Okay, so that's how you can find ideas during the trading day. And then, of course, swings. Watch the shows. It's always fun to watch some of the shows that are on TV, because then you'll see what those people are doing. And then, of course, with the mom and pops that are watching that stuff, the rookies are trading from home. And look, you can take advantage of it. Someone on TV starts pumping something, say buy, and the thing's up 6 days in a row, on the chart, and they say buy it, and it gaps up the next day. Look to short the thing if you get your setup. Okay, take advantage of it. So I think watching those shows and just being attuned to what other people are saying is always important. But don't let it guide your direction. Now, those same people that are on TV, they'll pump something, and I'll look at it, and chart-wise it makes sense. I'll buy it. So I will go with their recommendations some days. It all comes down to the charts that really dictates what I pull the trigger on and what I don't. And more oftentimes you don't. You see garbage. I talked about that in the last video around slop and looking at sloppy candles. Let it go, man. Let it go. Okay. All right. Hope you guys found this video useful. As always, holler at me if you have any questions. Tom@TomWillerTrade.com. Happy holidays.